Hey guys, welcome back to another edition of Future Wealth. Today I'm very excited. This morning, 9:30, market open. Actually, before I even had market open, I went through my homework and I was starting to look at, stocks for the intrinsic value. And this is what I was working on this morning as of today, 3/8/2021. I looked up a couple of stocks that I was considering, even though you see that I have all this entire list here. Actually, even, I went through most of the aristocrat stocks as well, and you can see majority of them are red right now. But the problem with that was I did this probably a few weeks back, maybe a week ago. So obviously between that time, we noticed that the market has come down a lot since that time. So what I did was every time I anticipate on buying shares of, obtaining position into a company, I always redate it and I would consider putting it into into this Roth IRA that I had my wife open. Here are the 5 that I bought. I'm going to go through them really quick and I'm going to show you exactly why this spreadsheet is so awesome now and how we came up with these numbers and why I'm considering them, or why I did consider them and why I purchased it. So of course, not all of them are aristocrats. Some of them are. 3M is definitely. I believe Home Depot is not. Home Depot is a champion because it's not part of the S&P 500. And I had another video that details that as well. So I'm just going through here. Not all of them are highlighted because even though I went through the price, it's just that every day changes so much. And, the dividend yield changes so much. So let's go through, the ones that I did choose. 3M, Home Depot, Lockheed Martin, Target, and Verizon, and why I chose that. On my spreadsheet, I have what I normally do, intrinsic value. And the 3 blue columns are static. And then that's the formula. Those were the values that Benjamin Graham used to find out the intrinsic value. Of course, if everyone does it a little differently, but I kind of used the numbers that I felt comfortable with that were resembling close to what the current market prices are. I went from there. Let's just look at 3/8/2021. I can better show that if I filter out everything else. So today I went through Home Depot, Verizon, 3M, Target, Lockheed Martin, Apple, Coke, Chevron, and AbbVie. As you can tell, I didn't do it in this specific order. I just recategorized it from buys to sell. And you can tell that, Home Depot was a buy today at a 11.7% upside. So I bought it at 260, I believe. Well, actually, no, that was the market close price on Friday. So this morning, and I'll show you a little bit later what I bought it at, so you guys can tell what. Okay, actually, these are pulling the actual prices now, so it's a little different from what I purchased it at. Okay, so I went through this, and obviously I didn't go through all of them. I picked the stocks that my wife would be familiar with. And she would have a personal interest with and something that she would know. So I had a few criteria that I needed to do in order for her to feel confident in what I was trying to achieve with the dividends and building out this portfolio on her Roth IRA. So she needed to know what the business was, right? So that leads all into the circle of competence. So she needs to know what they do, which she when I showed her this list, she was like, "Wow, Target's good, Home Depot's good, 3M is good." So she was very excited. And plus, we use Verizon as our cellular service, so that definitely was like a no-brainer for her as well. But of course, these stocks, these companies needed to make sense not just for her to understand, but at a priced reasonable for me to actually acquire them. So that's how we ended up with that. If it was not one of these, it would have been, another company that she was familiar with, and it had to be in a good position for us to purchase it. All right. So I was very excited. Today we went through $6,000 And now I will show you where we are and where we stand with the purchases I made. 3M, I bought 6 shares. Home Depot, I bought 7. Lockheed Martin, I bought 3. Target 6, and Verizon 18. Now, I actually learned something really valuable and really cool with these spreadsheets now, that I can pull live data onto the spreadsheet, and I know other people have done it already, and that's how I learned it. We can actually pull the real prices of the shares onto the spreadsheet through Google Sheets. And because the ticker, as long as I have the ticker, as long as you identify the ticker in whichever column or cell that you have it in, it will pull it. And how do we do that? Market price, we have equals Google Finance, and then you point it to the ticker wherever it's sitting for that company. And of course, then it all lines up, and that's how we get the actual share prices for the ticker. So these are the market prices. That's what it is currently. The cost share is what I actually paid this morning when the market opened. I jumped right on. As soon as I saw, the prices today was too green. That was the problem. But I usually would wait for a red day or a very long red day before I make a move. But I noticed the pre-market, everything was green, and I was like, there's no way I could time this. So I just went in, and I'm not. It's not bad that I did, because we're now, as of this morning at 9:30 till now, which is mid-afternoon on the same day, we're up $88.58. It's not much, but it's better than it buying it and going straight to red, right? So that's how this is what this is, and obviously the book value is at $5,975 and 6 cents, but the market value is $6,000. So it went up. It went up, not a little under. It's $88.58, which is cool. This is good. I'm not complaining. And this total dividend yield is just the average between these columns. It's, I don't know if I'm actually going to ever use that, but you normally would look at it per stock, per company. So that's how I would judge that. And of course, Target is the lowest one at 1.58%. Best part, and this is what a lot of people use, building dividend income, passive income, is annual income on all your dividend stocks. So right now, with this purchase of $6,000, we're looking at $174.42 for the year. May not sound like a lot, but as we grow it and compound it, hopefully we can build it out to be obviously a little more going forward. And so that's a number that I would consider very decent for now. If I was to do this any other way, if it wasn't just dividends, if it was just growth stocks, there would be no kickbacks, right? You wouldn't get anything. I think the scope of this portfolio, the reason why I was so excited and happy about doing this, was because I knew I was trying to build a annual income with this. I just had to find the right stocks. And of course, they have the dividend dates when they pay it out. Well, one thing I didn't look at, I don't know if they're all annual, so I have to recheck that again. So my allocation is 100% across. Obviously, that should be equaled out, because this is how these numbers add up to 100%, and it should be. This weekly chart, which is pretty cool in a spreadsheet. Not sure if, it doesn't do you much good by looking at something so tiny over there. But of course, if you were to look at the actual tickers, you can get all that information as well. And of course, here's a ticker, the weighted yield, and the sector. The sector I didn't fill out. I'll probably go back and fill out. But there's data grabbing, referencing these cells anyway. So it doesn't really matter at the moment. But what I do want to do when I fill out the sector is build out a pie chart to see what's my positions, my positions in whatever sector. So you get a pie chart to show what percentage is in what sector. So that would be a little later on. Right now I'm not too concerned with that. My main concerns were how many dividend annual income and obviously the numerical values to it right now. So yes, very excited. This is the beginning of it. $6,000 in Vanguard Roth IRA. I want to see what we can do, how we can do it, and that's how I'm gonna start. This is just the beginning. Of course, there's gonna be other stocks. I did want to probably, I know some people grow their dividend portfolio with a lot of selections, almost like their own ETF possibly. The one thing I want to do is fill in with other companies in different sectors. I'm going to say between 20 to 25 companies. And whether I exceed that or not, it's going to be around that number. There's no way I can manage 50, because one thing I want to do is revisit this maybe every half a year, going towards half a year mark, and see how they're doing, or go in every year, at least every year, to make sure that, you know, we're in good standings with the yield and the dividends and the stock price, and kind of just sporadically check in on the companies that we are investing in, whether it's on the news and their company website, just to see what's going on and if there's any new innovative things that they're trying to accomplish. So with that all being said, I want to thank you guys for joining me again. I released a video doing a circle of competence for Apple, and I will be doing it for each one of the companies that I am purchasing in regards to, you know, building out this dividend income. All right, I want to repeat that: a circle of competence on why I'm choosing these companies with dividends and why I'm choosing to purchase them at the time that we're in now, and why not others. So why them and not others? I would detail all that information in this circle of competence for each one of these companies. All right, thank you guys again for joining me. Appreciate it. Please like, comment, and subscribe. If you're new here, see you again soon. Bye.